This is why I love software businesses. This is why I love Constellation software as well. Topicus are doing the same thing here. This is brilliant to see. That's a big tick. Hey everyone, welcome back to my channel. So today I'm looking at the company Topicus because it's been highly requested here on my channel in my comments. Now, what I do here on my channel is I try to look at a company from a value point of view. I try to ignore all the hype and all the crazy stories of what might be of the company in the future. And we look at what's actually happening today with that company, what it might be with growth, but we try to look at it from a reasonable point of view, not that it's going to be the most dominant company of all time. Let's be a bit more realistic here. So that's what I'm trying to do here. And with Topicus, we're going to go through a 9-point checklist, and then I'm going to give you my opinion at the end. But first we need to just talk about, well, what is Topicus? Now, you probably haven't heard of the company Topicus before because it is a smallish company based in the Netherlands. And it's actually only a recent spin-off of a company called Constellation Software. So it's only been around for about, well, I don't think it's even been around for 12 months on the stock market. So what it is it like Constellation Software? If you're familiar with that company, what it is a software kind of roll-up business, which means it acquires software companies, it grows them and builds them out further, and then it manages their clients as well. And look, this Constellation Software as a company, I've done a video on this before. The person who started it was a guy called Mark Leonard. This is his picture here, and he's probably my hero. And look, I love Charlie Munger and Warren Buffett and Mohnish Pabrai. I love those guys, but Mark Leonard is right up there with them. Like, I think he is just one of the best CEOs of all time. And yeah, I know he's not a money manager as such, but he manages money of the company, and I think that's just as good. And look, if you haven't read Mark Leonard and Constellation Software's letters to shareholders, they are incredible, and I highly recommend reading them if you want to learn about one of the greatest CEOs, I think, of all time. He's definitely one of my heroes. I actually want to replicate this business in my own life somehow one day, but I'm learning so much from Mark Leonard. So I love the management team here. Mark Leonard sits on the board of Topicus, so this is a big reason why I'm looking at the company. Okay, now let's go take a look at the numbers. So the first thing I want to see is the revenue actually growing, so the business getting bigger. And I can look at the last couple of years. It's gone from 355 million to over 600 million now. So that's a tick. That's growing. That's growing quite quickly actually, so that's really good to see. Gross margins are actually around about 36, 38%. It's been pretty steady, but for a software company, you would think they should be higher than that. I like to see 40% as my gross margin, sort of like where I think gross margins are decent at 40%. So being a little bit below that isn't fantastic, but look, they're following the Constellation Software model. So they're trying to give back, pass on a lot of the savings to their customers, which it's probably a pretty good thing to do. That's how they're going to keep long-term customers anyway. But I have to give them a cross. Okay, return on invested capital, or their return on equity metrics. So if I look at 2020, 2019, it's well above 20%, it's 25%, 27%, numbers like that. 20% for return on capital, that's really strong. I'm definitely happy to give that a tick. The next thing I want to look for is their debt levels, and debt is the #1 reason a company can get into trouble. And what I really want to look for the short term is the current ratio, and I want that above a 1.5. So in the balance sheet, what I do is I go and look at the total current assets of 175 million, and I want that to be bigger than total current liabilities. And total current liabilities is actually 375 million. So current assets is nowhere near current liabilities, so that's going to be a cross. I want to do a lot more digging. If I like the valuation of this company, I like the other aspects of this company, I'd have to understand what's going on here with this debt. So debt is definitely a concern at the moment for me. Okay, next up is free cash flow, and this is really an important number to see growing, or hopefully growing, because this is essentially, as owners of the business, what we get in return. So free cash flow can be paid out as dividends, or they can pay down debt with that. They can buy back shares. There's lots of things, the ways they can return value to us shareholders. So free cash flow is the number, what they can use to do those things. So to find that number, I go to the cash flow statement. I look at cash from operations, and I minus this capital expenditure number. Now, as you can see, capital expenditure has been very low, like 3 million, 2 million to 3 million kind of number, but the cash from operations has gone from 80 million to 160 million. It does not cost them much money to make a lot of cash. This is why I love software businesses. This is why I love Constellation software as well. Topicus are doing the same thing here. This is brilliant to see. That's a big tick. Now, Topicus is listed on the Toronto's Ventures Exchange, so you're going to need a brokerage account that can access that market. Interactive Brokers is the one that I would recommend. I have a link in my description if you want to go and check out that brokerage account, and you can use a demo account and get a bit of a feel for whether you like it or not. I think Interactive Brokers is best just because of their fees are really low. They don't have a monthly management fee anymore, and they give you access to these markets. So that's my recommendation there. That's the one that I use personally as well. Now I'm going to turn over to shares outstanding, and if this number is getting bigger, it means we're getting diluted, and that's a bad thing. If this number is getting smaller, it means the value of our shares are becoming more powerful, and that's what we want to see. So I go and have a look at, well, in the past, looks like it was 39 million, 39.41, and currently the shares outstanding is 39.87. So it's gone up, looks like by about 1% over the past year. It's probably share-based compensation programs for their employees, but it is getting bigger and I don't like seeing that. So we are going to give them a cross, even though it's only going up very, very small amounts. I much prefer it to be stable, if not getting smaller. That's just my personal opinion. If I was working for a company and I was getting stock as an incentive to stay with the company, well, that does align me with the shareholders in the company, so that's a good thing. But look, I don't love it. I don't love the ownership of the company getting diluted. I'd much prefer if share-based compensation was getting issued, that they should be buying back with their free cash flow the same amount that they're giving away to keep that shares outstanding number the same. That's what I'd prefer them to do. But look, as long as it's a small amount, I can probably be okay with that and move on. Now, turning to insider ownership. Now, I want the incentives of the management team aligned with us as shareholders. So to do that, I go to Simply Wall Street and I have a look for, well, here is Mark Leonard. He owns 2% of Topicus, which is valued at around about nearly $100 million worth. So I know Mark Leonard doesn't pay himself much of a salary. I actually don't think he pays himself any salary whatsoever now. All of his net worth is tied up in Topicus and Constellation software. So that's a very strong incentive structure for him, because being on the board of directors of Topicus, he wants that to do well because it's related to his net worth. I'm really happy with that. Look, I don't know much about the Topicus CEO. He's a Dutch guy. Dan Dikhuizen is his name, but look, I don't know much about how much ownership he has in the company. There's no data on this, so I'd have to go digging around for that in particular. But just seeing Mark Leonard there, that's enough for me. I'm very happy to give that a tick. Now, the next thing I like to look for are super investors invested in the company. And the reason I do that is because I'm not that smart. But if I can find somebody who has decades of experience, who is someone I really respect as an investor, and they've invested in the company, well, that gives me a lot more conviction, and that makes me feel less of an idiot if I do invest in the company. At least it's gone through some filters already from someone better than me. So to look for that is, again, I'm back in Simply Wall Street, and I'm familiar with the biggest owner in the company in Chuck TIKR at TIKR Capital Management. Chuck TIKR is a value investor. He has a long history of a very successful portfolio. He owns a really big piece of this company. Now, the reason he owns a big piece of this company is because he actually owns a really big piece of Constellation software. I think he might be the biggest shareholder in that company as well. And when the spin-off happened, they spun out shares into TIKR Capital Management. So I think that was how the ownership came about for him. Now, I also know that Christopher Meyer from the book 100 Baggers, I know that he has a stake in Constellation software and now Topicus as well because of the same thing. Because of the spin-off that happened, he got shares in Topicus. So there's two very respected people in the investing world. Chuck TIKR in particular, I have a lot of admiration for. And of course, Mark Leonard, being my hero, is obviously invested in the company because it's his company. So that's another super investor, I guess. Now, the last thing we look at is the price, and this is the most important part, because even if it's an amazing company, we don't want to overpay because it's going to hurt our return on our investment. For example, if there's a local gym and it makes $50,000 a year, and that looks like it's going to be constant for the next 10 years or so, well, 50,000 times 10 years is $500,000, but I don't want to go out and pay, I don't know, $50 million for that company. That's insane. It's only probably worth a fraction of $500,000 because it's going to take me 10 years to get that money back. So the same thing as what we do here is we try to treat buying a company on the stock market just like we would if we're going to buy the local gym or the local bakery or anything like that. We have to look at how much money it's going to return to us and then give that a value. So to do that, I use my intrinsic value calculator, which I'm showing right now, and there's a free link in the description. Now I've gone ahead and plugged in a lot of these numbers, and I've decided to use the growth rates of, even though it is growing a little bit faster than this at the moment, I want to be a little bit on the conservative side. And I'm going to say 20% and 15% for the next sort of 5 years and then the 5 years after that. Now my discount rate is really high. The reason it's at 30% is because I aim for 30%, and hopefully if something goes wrong or something changes, I'm going to at least get in the 20% range. So that's my aim here. I aim for this 30% number. The multiple I could sell it for is about 20. It's a software company. It's hopefully going to be a great company of the future, and those growth rates are pretty strong. Definitely warrants a 20. This is the free cash flow number, which I found. The shares outstanding, total cash, and the total debt. And it gives me 40.75. Now that's in euro. Now I have to turn that into Canadian dollars. Now, at the moment, if I put in 40 euro or 41 euro, it's about 60 Canadian dollars. So 60 Canadian dollars would be a fantastic price to invest in this company. That's actually the price that it IPO'd at, which would have been amazing buying, but too late obviously for that. The price at the moment is around about 116 Canadian dollars. So if I go back to my intrinsic value calculator and say, okay, maybe my return on investment is a bit high. Maybe this is an amazing company. I should be paying a little bit more for it. Maybe I'm only going to want, I don't know, 20% discount rate. Therefore, my margin of safety is not as strong. Maybe I'm only going to get 15% return on my money. So I'd want to buy it at about 80 euro. And 80 euro is 118, let's call it 120 Canadian dollars. So that's about what the price is right now. So it's probably, I would say it's probably a little bit below what I would call fair value, because 20% is still a pretty decent discount rate to get. I want bigger margin of safety in my investing, and I want a bigger return on my investing. So I'm putting it back to 30%, and that would be what I want to buy it at. So that $60 Canadian dollar range, the price would have to nearly halve from here. Now that might seem crazy, but stranger things have happened. Alibaba shares have fallen about 50%. Tencent shares, they're fantastic companies, and they've been cut in half just this year. So it is possible. That's what I'd be waiting for in this situation. Okay, so here's my overall opinion of Topicus. Now, Constellation Software, which is the parent company of Topicus, that's probably my dream company. I love that company. The problem is I haven't been able to buy it because of the price. That's the only issue. But Topicus, I think their free cash flow actually runs through into Constellation Software. So I have a bit of an issue whether I'm actually getting the free cash flow when I invest in Topicus, or whether I should just invest in Constellation Software at a good price. Haven't quite worked that one out yet. Now, I did have a little problem with the gross margins. They're not amazing, but they are replicating that Constellation Software model in Europe, so I'm okay with it. Shares are increasing very slightly, which I wasn't that happy with. And the debt is something I really need to investigate a lot further as well. But I do respect Chuck Akre, Christopher Mayer, and obviously Mark Leonard. I respect all these guys a lot. So for them to be investors in the company, that gives me a lot of conviction. Now, I don't think Topicus is actually crazy overvalued. It's probably around a fair price, but I want a margin of safety, so I'm not buying it anywhere near it at the moment. I need a lot bigger margin of safety. That's very conservative, I know, but that's my style. So you got to work out your style and what you're comfortable with. But overall, I think Topicus, it's an investment into this Constellation Software culture, which I trust more than a lot of corporate cultures, just because I've studied Mark Leonard. Now, if you do like this company, you do need to understand who Mark Leonard is. So go and study up on him first before you invest in the company. Do as much investigating as you can. And I'd love to hear what your thoughts are. If you could tell me in the comments below, I'd love to talk about Topicus and Constellation software. Now, before you go, make sure you hit the like button if you got some value out of this high-level approach to Topicus, and I will see you in the next video.